Alrighty, guys. Welcome to this Wednesday, this February 4th. I'm thinking January. So a good sign. Hopefully you can hear me. Sound is good. So starting off this trading day, we are in a spot where yesterday was pretty gnarly. It was an elevator down day. I hate those, but that happens. It's like they ran it. They grind to the upside, and then you have one of these big days that's right all the way back down again. It's like a mini elevator down day. It wasn't that kind of a day when you run it through three standard deviations to the outside or something like that. But it was a pretty good sell-off, and they were right up here against this upper area resistance. We talked about the potential for failure. And boy, did they fail. They're right back here to the attractor. Overshot it, they're back to the attractor area, and that's kind of where we're starting off the trading day. So I guess you're still just range bound with a lot of volatility is what's going on. We do have still in earnings season, so earnings are coming out still. News this morning with the mortgage apps came out this morning. They were a little bit to the downside, a little bit to the downside. At 8:15, we get an ADP report. 8:30, we get a Treasury refunding announcement. 9:45, PMI composite, ISM services at 10. Old report at 10:30. Now, I don't know if some of these going to get missed because of the shutdown, the little mini shutdown. They're talking about that employment situation may get missed. Last I heard, it was not coming out on Friday, so I'm not sure what's happening with that one. But I'm going to assume it comes out here until I get some solid confirmation. But chances are we're going to miss the employment situation on Friday, which make this week kind of anemic when it comes to news at that point. So range bound trading is kind of where I'm at on this one. And just watch the headlines. So you get a shitty headline, and then you can certainly take this lower, take out some lows here. You get the positive headline, maybe take out the highs and head higher. So, but right now you can see the volatility is picking up for sure. I mean, the last few trading days, we had like big swings. I mean, the big moves up, big moves down, and it's anyone's guess where that's going to end up. So, it started already going into the end of January, and February is usually February, March, I should say, is usually tends to be, if you're going to get weakness, you usually get some weakness sell off and some churning going on there. But you do have money coming in, you have earnings come out. Nothing is really coming out that's being bad. So it's, I think good news is good news. Market is kind of holding on to the highs from there. So we're starting off range bound. I would look to buy weakness, sell strength fairly equally. The fact that they backed off the lows here, started close at the attractor point, is pretty much. I would just take that as it's not the free for all selling, which is going on right now. It's like risk off, and then they pile on and massive pile on, and then it's a rotation out of some sectors into others. So just had to kind of watch it and trade what you see. So looking to sell strength at this point against the 6960s, 6980s, 90s, 7000s, 7020s for rotations back down, 7025s. So all the way up here looking for short setups. On the way down, looking to buy against the 6940s, 6930s, 20s, 6910s, 69 or 6895. 68.85 rotations back up again. Last one would be down here at the 68.65, but I mean that would have been a pretty ugly one if we get that far down. And as you approach the outer edges, the chances are that the support's going to just get stronger, and when you get into those outer edges, if they start taking out this area, the 68.85, I would probably start leaning in on the short side a little bit more aggressively and start taking out this upper area, the 7,025s, I would be leaning in the long side a lot more aggressively. At that point, I think they have definitely a move to the upside happening. But unless we get a headline, something happening. I'm not seeing the reason it would extend to the upside. On the downside, just the fact that they're not extending is reason enough for it to be concerned about the potential weakness. Eventually, someone's going to start covering, And then you'll see if they start taking out some of those key support areas, that's when it gets ugly. So you see if they are down here testing the 68.85, and these are these lower support areas we have on the screen. If they start testing those and start taking those out, yeah, start worrying about the short side. If they take out that three-letter ledge at 68.20, that's when potential capital flow change is happening. So that would be a much bigger concern. The only thing I can see happening here, it would drive that in the short term, really is any military action in against the Iranians. That would be something which potentially could cause a short-term drop in the market. Other than that, I mean, it could be a headline, could be an earnings report. Usually, an earnings report will cause a sell-off like we had like yesterday. South side, it just kicks off a bunch of algos and then start piling onto each other, and then you get this free-for-all selling until we get to attack at 2 o'clock hour, and then they have to reverse it. And we had those marked up on the chart. That's what our stripes are on the chart. You have the open, you have the 11:30 London close time frame, you have the lunch hour 1:30 to 2:30 Eastern. Usually changes happens in those time frames, and it's so it's worth paying attention to. So if you have a market like it's selling off hard, running into one of those time frames, it's worth paying attention to it. By the time when it reverses, you won't notice it until you will miss the whole thing unless you kind of add that perspective to it. So starting off range band on the ES, look to buy weakness, sell strength, and as I said. Just to repeat the levels again real quick. Looking to sell strength against the 6960s, 80s, 90s, 7,000, 7,020, and 25s. Looking to buy weakness against the 6940s, 6930s, 20s, 10s, 6895, and 6885 for rotations back up. And as you approach these outer edges, it just becomes better. It just becomes more likely it's going to hold. Now, the only thing you want to do if it starts running higher or running lower, and you want to do go with type of trade on the short side or long side, it starts running higher and you want to hop on the long side, just make sure you don't buy into resistance. So in other words, when you approach this resistance area, 6980, don't hop on a long trade, even if it looks tempting. Chances are you may just stall there. So that's usually the mistake you do when you lose perspective. You don't pay attention to where you are in the bigger picture. Now on the Nasdaq had it even harder, and then you can see the Nasdaq has they did not get back to a tractor at the 25,700. They're holding well below it. The Nasdaq is a lot weaker. The Nasdaq is in a spot where they potentially could drag the whole thing with it. And you have to watch these lower areas, the 25,000s to 25,200s. That's your big area of tell if it's going to really start getting into a correction of some sort. So that's kind of the way I'm looking at that and fold this stuff together like that. But other than that, I would probably start with a bias to the downside on the Nasdaq. I'm watching these two resistance areas, the 25,510s and the 580s. If they can get up above them, I'm back range bound. As long as they stay below those two, I'm going to start then keep a bias to the downside and see if we're going to get further weakness on the Nasdaq. So there you have. So initially we're looking to sell strength on the Nasdaq at 520 and the 580s. Rotations down. Above 580, we're taking off the short bias, and that's going back flat out. Range bound, still trading it the same way, but it's a lot less aggressive on the shorts at that point. And if they start heading lower, looking to buy against support against the 350s, 270s, 220s down to this 170 area. Well, with a little bit of caution, since we have leaning towards the short side, there's no reason to be aggressive on the long side here. If they start heading lower, you start taking out that low at the 350s, I would probably look for a short, go with type of trade and see how far they can take it. When they get into these areas, the 260s, 220s down to the 180s, looking for buying opportunities against those. So if all that comes out, you start trading below this at the 200s, I would be a lot less inclined to want to step in front of it, looking for a buying opportunity. I made a couple of mistakes yesterday. I was a little bit too aggressive on the buy side in a different account, but it's just on the Nasdaq, you just don't want to step in front of it. You wait for the failure and then you try to hop on. You can be aggressive when you see it at this, it's stalling and starting to reverse. It could still just go run right over you, but at least you have a shot. It's just stepping in front of it at the level on the Nasdaq. It's pretty tough. So I wouldn't be doing that. So anyway, but watch these areas, the reverse retest of the 520 and the 580s. If that holds, we're still staying on the short side. If they take it out, I can see that us retrace back up towards this attractor at the 700. I would still look for short opportunities against the 640s, the 700s, the 730. Well, what is it, 690, and then 740s. For rotations down, because you never know. Nasdaq is notorious for running it up here, running out a level, one or two levels up, and then just absolutely reversing on. So these are the obvious areas of resistance. They could hold. That's what I would start looking for initially. If they came out, I could see a potential long trade running it higher, but I would not watch that you don't buy into these resistance areas on the way up if they get that far. I would look for short setups against them. And if they clear that 740s, I think that the bulls are really starting to retrace these single print Bs pretty good at that point. So that's the Nasdaq. So ES, we're starting range bound. Nasdaq starting with a slight bias to the downside until they can clear that 580 on the upside. And then finally, the bonds. What are the bonds doing? Same story there. I did not take a trade on the bonds yesterday, but you can see that we are right up here. It looks like they're trying to take it higher, but it's still just a flat out range bound trading scenario on the bonds. And I don't spend too much time about it until I see something interesting. It just keeps building value here. This low volume area is starting to disappear. Everything's coming to balance. Has stayed in balance for quite a while. So looking to sell strength at this point against the 115s, 115.05s, 1510s for rotations down. We're going to buy weakness against the 1416s, 14.9-10s for rotations back up again. So that's the levels I would pay attention to this morning. So it's pretty much a range-bound trading scenario. I'm just watching on the bonds right now. I'm just watching for setups like these ones right there. 1, 2, 3, 4, 5, 6 bars could not extend past the 25s. That's the kind of setup. But I'm not looking at it in the overnight. In the overnight, it could be deceiving. It could be deceiving because it just doesn't move that much in the overnight. But if you have it in the day session or after the 8:20 start, at that point you get a little bit more. It's a little bit more obvious. A little bit more obvious setup. So after that 8:20, you see it run up to one of the outer edges and stall, and they have 3 bars stalling like that. I would probably click in an order and take a shot at it. In the middle out, not so much. You can get the same behavior in the middle out in the afternoon that he just sits there and stalls, but that's not the kind of setup we're looking for. We're looking for an outer edge, up or down, and we're looking for a stall, and then or a potential back off. They retest it, come back and retest it again, and then fail. One of those two are the setups we're looking for. And if that happens, we'll be in good shape. But you had to be super patient on the bonds. It's just not at all easy. Trading the Nasdaq, it flies back and forth. And be quick and nimble on the bonds. You have to be patient. Click in your order and let it sit. And be nimble if you start going against you, that you scratch it right away if you have a shot. Anyway, back to the ES. So range-bound bonds, ES, range-bound Nasdaq to the downside. Let's see how this whole day starts shaping up. All right, guys, we'll wrap it there for now, and I'll see you back at 11:30 for the next update. All righty, guys, later.